a Danish pharmaceuticals company called Novo Nordisk.
Still dominant in the market.
Two top drugs sell at the moment are for diabetes and obesity.
That's trusted by doctors and insurance and regulators. Recently invested more than 10 billion in manufacturing to scale and grow.
Novo Nordisk has just seen a massive drop, particularly this year.
There's facing competition. The market completely overreacted.
I think the demand for these sort of drugs is only going to increase.
One thing the market is missing is, if you're a long-term investor, I do think there's fear price in there, but the best time to enter.
Welcome to the latest episode of the Intelligent Wealth Podcast. And with me today, as usual, are our eminent guests, one of which is Awet, who is the head of research at Minerva Money Management. I'm the managing director, and my fellow director and shareholder, Carl Roberts. Welcome today, young gentlemen, or should I say. This podcast is really for serious investors who are looking for some what we consider intelligent insights into various companies that we think are worth considering for investment. Some of these companies will be in our fund, the Intelligent Wealth Fund. Others won't be for whatever reason. But the idea is to give you some useful insights into these companies to help you in your journey doing your own investment research, because we don't think it's wise to just follow other people's tips. You've got to do your own research. With this aids you in doing your research, we think that's a good thing. We're really focusing on giving you value for money. We do produce our own one-page company insights, including one on the company we're going to talk about today, Novo Nordisk. But do bear in mind, this isn't advice. It's just purely our own views. So just take it that way, and hopefully you'll get a lot of value out of this podcast. So as I just mentioned, the topic for today is a company that's been in the news quite a lot recently, a Danish pharmaceuticals company called Novo Nordisk. Now, not many people know much about this company. For a start, it's quite unusual that it's a Danish company. Usually pharmaceuticals are dominated by the US in particular. And this country does have very interesting roots going back to 1922, when the founder went off to Canada to help his wife get treatment for type 2 diabetes. And it ended up with him going back to Denmark and forming a company called, let me look it up here, Nordisk Insulin Laboratorium in 1923. Anyway, basically this company later merged with another Danish company called Novo Therapeutisk Laboratorium. So the two first names were combined to create a company called Novo Nordisk. So that's the long story behind that. Now, today, the CEO, who is Lars Jorgensen, he's been with the company a long time, since 1991, but he only owns a small holding percentage-wise in the company of 0.015%, but that's still worth $36 billion, so still quite a lot of money. We prefer there to be visionary founder owners with at least 10% what we call skin in the game. This is much lower than that, but this because this company is a very unique company in that there's a significant minority holding in the company from a charity, which is, or a foundation, same thing really, called Novo Nordisk Foundation, which, although they only control 28.34% of the share capital, they do control 73% of the vote. So it's quite an unusual structure. But in some ways, I quite like that, because the pharmaceuticals industry doesn't have a great reputation. Let's be honest about this. There's been many cases documented where they've had to make out-of-court settlements for multi-million dollars. They've lost lots of court cases. There's been lots of evidence of people suffering harm and even death from pharmaceuticals. So in many ways, it's not a great industry. But I'd like to think that this company, because the two top drugs they sell at the moment are for diabetes and obesity, you'd like to think, because they're 73% owned by a foundation, that they've probably got a better moral compass, shall we say, than a typical pharmaceutical giant. I think that's quite an interesting aspect to it. Only time will tell. But that gives you a little bit of background and a bit of background into the leadership of the company, which I hope you find quite useful. But to get into the hard facts about the company and how it's likely to perform and how it has been performing, let me hand you over to Carl in the first instance for his observations.
The market completely overreacted to the guidance. The market completely overreacted to the guidance.
Yeah, so Novo Nordisk. Let's if we look at performance and starting with 5 years. So we're recording this podcast early August. The 5-year cumulative performance for Novo Nordisk is around 47% positive. But let's just put that into perspective. Over the last year, so if we look at the last year's performance, they're actually down 66%. If we compare that to one of their kind of big competitors, Eli Lilly, over the 5 years, cumulative performance, whereas Novo Nordisk is up 48%, Eli Lilly and Co. are up 392%. Now, Novo Nordisk was kind of trending the same sort of journey up until this year, effectively, or sort of early this year, late last year. But Novo Nordisk has just seen a massive drop, particularly this year. The actual issues around their kind of profit growth and forecasts and sales that obviously was not as good as originally forecast. It actually led to around a 24% drop in a single day in the market this year, which is their worst single day drop since, I think, 1987's Black Monday time. And it probably wiped off around 70 billion of the market cap for Novo Nordisk. So yeah, Awet, if you wanted to go into a bit more details around some of the reasons for this, because I know they're obviously changing the CEO, market doesn't like the uncertainty, and I know some of their kind of sales and kind of targets they were aiming to hit also didn't live up to their expectations.
Sure. I mean, one thing we need to remember, Novo Nordisk is a healthcare stock, which is more defensive sector, which is stable and non-cyclical because we rely on healthcare quite a lot. I mean, all of us, even if during recession, if there's like we have health problem, we always have to pay for it regardless of the economy. So one thing I like about Novo Nordisk is, their purpose. They drive to change and defeat serious chronic disease and build healthier future through life-changing innovation. But recently, what we've seen is, I think there is pressure in terms of, Eli Lilly has come into the market and so on. And I think the market investors were favoring Eli Lilly in comparison to Novo Nordisk. And with Trump coming into power, the market were quite skeptical about any other foreign stocks. So recently, a few days ago, Novo Nordisk had an earning report, and the report were, the next half sales will be the forecasts were lower. For example, they lowered for sales growth would be between 8 to 14% per annum the next half. So it will be lower than the market anticipated, considering, historically it's been growing higher than this number. But the problem we have is the market didn't like the forecast because they realized that they are facing competition from Eli Lilly, and they had a program with him and her. And I think there's facing competition, and the market didn't like the competition. And that's one of the reasons the share price, as you mentioned, it was declined by 22%, and year over year is down or around 66%. So really, that was the market really misunderstood. They realized it's just, this is going to be the future. The competition is going to intensify. So the market received it quite negatively. So the valuation pretty much dropped. As we said, it's down 66% year over year. But what do you think in terms of the valuation call?
Yeah, so obviously with the destruction of the performance, it could potentially bring opportunities in terms of valuation. So if we look at some of the standard metrics for
Yeah.
sort of valuing companies. I mean, using the trailing price earnings ratio, Novo Nordisk is now trading around 13.9% PE. So that's very competitive compared to its sort of sector. The forward PE is around sort of 12. So again, you're now looking at quite a reasonably valued company, or you could even argue potentially cheap. If you look at it compared to the sort of sector, the peer average price earnings is around 26. So compared to Novo Nordisk 13, it makes it quite attractive. If we look at Eli Lilly, obviously the big competitor we've already spoken about, their forward PE is around 35. So, just on those kind of metrics, Novo Nordisk is now looking significantly cheaper, but of course it could be cheap for a reason. So it's probably worth delving into some of the kind of risks and whether you want to take this opportunity to buy Novo Nordisk. I don't know if you think
Yeah,
about that.
If you think about it, even though Novo Nordisk, the forecast would be lower, the guidance, even I included the guidance to see the discounted cash flow, it's still, there's a significant margin of safety. Based on my calculation, I can see there's 30% margin of safety because the market completely overreacted to the guidance. Because if you look at this company, it's pretty much, the free cash flow was for the year was 12 billion. And they still growth. And I calculate the free cash flow conversion rate in the last 5 years. On average, they convert most of their earning into free cash flow. So they're still, trading, as you mentioned, discounted to their peers and so on. But one thing the market is missing is this market is early. I mean, the diabetic market, when we look at countries like India, China, people are eating more. The food is plenty, more than historically we eating a lot. And I think diabetic is becoming one of the biggest concern globally. And I think that the drugs needed is going to be increased in the future. If you look at the Novo Nordisk, they have product around 25 countries, and they recently invested more than 10 billion in manufacturing to scale and grow. So this company already investing and going through direct to consumers. I think they have opened this shop called NovoCare, which is they charge 499 per month, for a subscription and so on. So there's a lot of tailwind in this drug industry, especially going for the company. And what we have to not underestimate is this company is pretty much one of the leader in especially in obesity and diabetic drugs, and they control around 55% of the market share. So, and when we look at diabetic as well, it's still early. Not many countries people receive care. As I mentioned earlier, there's a lot of unhealthy food around, so it's easier to become obese than to become slim. And I think their needed for their drug requirement and need would be on the uptrend.
Yeah, I totally agree with that one, Awet. I think that people's natural laziness when it comes to like looking after yourself, like eating healthily, eating organically, spending time cooking. Mostly people don't want to do that. It's certainly not in the UK and definitely not in the US. So these drugs companies know that people's natural laziness will lead them to eating more and more, not just more food, but eating more unhealthy food. The takeaways, the processed food, the junk food, all that sort of thing. I can't see it reducing. I can only see it increasing. And then even in parts of the world where they've historically had tremendous diets, it's all changing. And Okinawa in Japan, for example, is a part of Japan where I think it's an island in Japan where historically people lived to age 100 quite normally, and no one had diabetes. And they discovered that the diet of Okinawans was 98% vegan. What's now happening is that they're now eating far more Western processed foods, and that previous tremendous track record of having longevity and lack of diabetes is fast disappearing. Now people are getting Western type diseases. So I think even in third world with more healthy traditional diets and exercise, it's eroding as well. And so I think the demand for these sort of drugs is only going to increase.
Yeah, I think what you learn as well, looking at through history. I mean, historically, people used to die from starvation. Now, I think the other way around, people are, we dying by overeating. So the food is
Yes.
plenty, as we mentioned, and is
Well,
yeah,
yeah.
it's growing. And I think what you see as well, they control around 63% of the diabetic market and 34% of the global sales in
That's
terms. So
amazing.
this is
Yeah.
quite powerful. This is a company that's trusted by
Yes.
doctors and insurance and regulators. So this is not like this is a very established and well reputation company. And I think the market overreacted to the short term, but as an investor as well, we have to realize if you're a long-term investor is to buy when there's a blood in the street, when there's a fear in the street. I think for my view, based on what I can see, of course there's a competition, there's a risk, but the long term, this is a good, entering point for a long-term investor, especially if your time frame is 2 3 years from now, because the drugs will be needed, and I think we will rely on them in the future.
Yeah. The interesting point you made about these processed foods. Did you know that sugar is the third biggest killer of human beings in the world? Sugar. You look at that sugar bowl; it looks quite harmless, doesn't it? But more people die of eating too much sugar than die from all physical violence in the world, including all wars. That's quite a sobering thought, isn't it?
Yeah.
Quite a sobering thought. So
Yeah.
yeah, I think they're probably. I'll probably describe Novo Nordisk as probably one of the more. How can I put it? Probably one of the more ethical of all pharmaceutical companies. Probably down to their ownership, really. Ownership
Yeah.
structure with that foundation owning 73%. So I think that's a pretty good sign.
Yeah, I think the thing with Novo Nordisk, what you get to is like it's not like a visionary founder or owner like Mark Zuckerberg, which they will take high risk, and you will get stability and long term thinking.
Mm.
So because they think long term, but the reality is the company is well positioned financially. When we look at the financial statement, you can still they have around 6.3 billion in cash,
Mm.
and their total debt they're around 12 billion in free cash flow, and total debt around 18.2 billion. And the goodwill makes a lot, I mean, small percentage of the balance sheet, which is around I think I believe is around 6%, and interest coverage around 44%. So the company is well positioned financially, and I think you still have a strong free cash flow generation. It just the guidance is lower. But historically, I mean, you probably know this, Tony and Carl, by running business. Business is a cycle. Sometimes you have a good cycle, and sometimes you have a bad cycle. The same as you could argue the economy. So it's all cycles. I think they currently facing a bad cycle, and I think they will emerge from this cycle strongly. I believe in the long run.
Alec, you mentioned 18 billion of debt, like casually saying they're a well-financed company. That doesn't sound like good news to me. That sounds like a lot of debt
But if you look at the free cash flow, that's 12 billion. So
per annum. So
almost
they're
yes,
bringing in surplus cash of 12 billion a year.
a
So what you're
year.
saying
So
is
they can cover it
they
if
could
in the
easily
yes.
pay it off, is what you're saying. But they've decided instead to reinvest in the business by spending 10 billion on, infrastructure and restructuring the company. So yeah, that
Yeah,
makes
but
sense.
building manufacturing in the U.S. because
Yeah,
if you remember
yeah,
a few years there was there was more demand, but there was less supply. So what
yeah,
Novo Nordisk did is they take the advantage to build more, invest more in manufacturing, so they can scale and grow. So they
yeah,
built in they like Amazon. They were building they putting the upfront cost now. In the
yes.
future, they can produce more drugs and they can sell more. So they think it for a long term, and
That's
that's
good.
why this is not a company that are losing its competitive advantage. This is a company is still facing competition. Allocated capital very well. Even if you look at the return on capital average in the last 5 years is around 30%, and
Yeah,
margin around 84%, 85%, and free cash flow margin is around 26%, which means they convert 26% of their revenue into free cash flow that can be reinvested into the business, into new drugs. So this is a quality business just facing temporary problems.
Yes, I think that's a good point. And presumably they would be affected by Trump's tariffs, because all countries in the world are caught by these tariffs. But
Yeah.
that's why they're investing in manufacturing in the States, presumably. Maybe they were going to do that anyway. But that sounds like it's going to help them as well.
Yeah, I think the argument Trump recently has been making was, drug in the U.S. are 10 times more expensive than other countries, and I think that American people have been treated unfairly, and I think that put pressure on pharmaceutical company to lower their prices. When you lower your prices, which is your profit margin, get contracted. So that's the risk investors see, and I think that's where you can see the share price is investors are the company is confirming there's a pressure on in competition and price, for example. So investors are going ahead thinking, well, there's more pressure will be coming by cost. I mean, cutting costs on drugs as well. So that's one of the risks that we could see. That's why they lowered their guidance. Still, the guidance is between 14, which is midpoint will be 11%. So it's still decent growth for a company. And so that's one thing, as you mentioned, the rising competition from other companies and the copycats. I think that was one thing they mentioned on the annual report. There are companies are copying their drugs and they are marketing themselves better using, I think that's why they terminated their contract with him and her, which is the company that was marketing Novo Nordisk drugs, because they realized that they were more interested in marketing their own drugs rather than Novo Nordisk drugs. And they are pursuing few litigation for investors, for patient interest first, to make sure a patient doesn't consume one of these fake drugs which contain harmful chemicals for patients. So there is a lot of things going on here, because I think this drugs is everyone wants to have of it, because of, if you look at the Western world, obesity is one of the biggest concern, and I think everyone wants to have of it, because as you mentioned earlier, not many people wants to do the work. Most people wants to just do it through drugs, and I think they're just trying to go to the cheaper version, which create constraint on Novo Nordisk.
Right. I think we've pretty much covered everything we wanted to cover, I believe. Is there any more comments, gentlemen, you'd like to add? How about you, Carl, before we close?
I think it's worth just spending a bit of time just on their kind of competitive advantages, because obviously we always like to see a company with a strong sort of moat, one of Buffett's favorite sort of sayings. And they've got a couple of things going for them, particularly around their kind of product innovation. And they are, I think, in the diabetes area, they're still seen as sort of the market leaders, very popular drugs for diabetes, and also very easy to administer. I think they've got once weekly injections now, oral formulation. So people like you said, Awet, they want easier. They don't want to be injecting themselves every day or twice a day. So they've improved their kind of already market leading drugs. They're also in terms of barriers to entry, they've got a strong manufacturing supply chain operation. So they've got highly specialized manufacturing facilities in Denmark and the US. These are very difficult facilities to replicate. They require years of regulatory approval and control systems. So that does create kind of those barriers to entry to kind of other people stepping into. I know that we've mentioned Eli Lilly as a competitor, but in terms of others, it is still very difficult to kind of break into this space. They've also got the kind of brand and regulatory trust. Like they are household names in the sort of diabetic area. And they've got very strong relationships with the global health agencies, which again is going to matter when it comes to what drugs doctors and healthcare professionals recommend. So yeah, and then also just financially, I mean, I think they're on a 80% plus gross revenue margin, which is obviously really strong. They've got return on capital invested has been about 50% the last few years. Sustained R&D investment. So with those fat margins, so there's a lot going for this company. I think the summary I would take away is, if you've got this company on your radar and you've done your research and you like the look of it, you're probably not going to get a better time to come into it at these kind of valuation levels.
Yeah, I mean that's a good point as well. Like if you what you mentioned as well, most of chronic illness, like insulin, for example, they are recurring by nature. So this company benefit from this recurring revenue because people will rely on them pretty much unless you change drastically your diet. You will still have to rely on them for life. So that helps as well. Recurring revenue drive profitability and so on. As I mentioned earlier as well, like uh, countries like India and other part of the world, the Middle East, is still emerging, and there's a lot of people would have access to these drugs in the future. So the company will grow in those sort of markets. But to conclude, to make the final point, yes, I do think this company is underpriced. And if you're a long-term investor, I do think it is, there's fear price in there, but the best time to enter into a company, if you have a long-term mindset time frame, is to buy it when, it's distressed, when there's a lot of problems is going for the company. As Buffett, he did when he bought American Express. I think American Express had a problem, but not directly with the payment business, but there was they got into an oil business, and suddenly I think the share price it was mispriced, and Buffett discovered there was a mispricing in there. And I do see the same thing here. There's a mispricing in Novo Nordisk currently. But again, this just depend on the future, what the next guidance in the future, the competition, how it will intensify. They're still dominant in the market. I mean, they are still the one biggest player.
Yeah.
But if they continue, especially with the new CEO coming on board, which he has a lot of experience, if he can execute well and pull up the company from this current mess, I think the company has a long term to go because they are pretty much the leader in this space.
Great. Okay. Sounds promising, gentlemen. What we'll do, we'll put links in the show notes, and we've got, as I mentioned earlier, we've got this one-page company snapshot on Novo Nordisk, which you're free to order from us. The next episode is going to be on a company previously known as MicroStrategy, now known as Strategy, which is a so-called treasury company that invests in Bitcoin. So that's going to be a very interesting subject for next time. Please do leave us a review on Apple Podcasts if you're listening on Apple. We really do rely on it. It does help us get better reviews, increases our rankings, and helps us to bring along better interview guests. So all I can say is thanks very much for your contribution, gentlemen. You've been brilliant as usual. And all I've had to do is host the show. And look forward to you all joining us next time. Have a great day. Bye for now.
Thank you for joining us today. Please help us spread the word by sharing this podcast with your family and friends. And don't forget to subscribe.